Alright, YouTube, it's your boy Jacoda. This time we want to talk about how you should use your stop loss, take profit, and you should never trade, never leave your trade on a Friday night or on a holiday, which is gonna extend itself into another week. And let me tell you specifically why this happened to me. So on like my I've been trading for like 3 months, but I'm pretty smart. I got this. I'm not going to be like I got this down, but it comes naturally to me. That's why I have the confidence to talk to you guys and approach you guys. It's always good to share your knowledge. Never let anybody undermine your knowledge and put a time in your life. Okay, so I was trading and it was like, it's like a Friday. Everything was going profit and boom, I didn't check the time the forex market actually closes. So, it's the little things you learn when you first get in the whole market thing. But it was like a Friday. On Sunday there was a big gap and there was a margin spread, all that crap. You know, it's not a loss; it's a lesson. In this field that we are in, it's a lesson, and you move forward. You only make profits. You never make a loss. That loss that you see is not a loss, it's a lesson. That's how you get better. Michael Jordan had to take a lot of shots. He got turned down in high school, but look at him. Kobe had the Mamba mentality. Kobe is the perfect example of just never giving up. It's like Captain America. He keeps saying I can do this all day, but you got to do it in the calculated steps. That's why I have the three C's. I say calculated moves, calculated risks, to get calculated results. If it's not a calculated move and it's not a calculated risk, you cannot get calculated results. So, all right. So back to the stop loss, take profit. Okay, this screen I'm actually working on my GBP USD. You always want to follow up on where you left off. You don't ever want to clear everything out because it shows a transition. Apparently, this is the holiday, so the market closed earlier. There's a lot of manipulations and stuff going on. You gotta be careful trading around the weekends. But if my prediction is right, it's gonna go for a drop. I feel like it's a big drop. That's why we have these lines. These lines show you the future, basically like a wizard. But you got your own, like a third eye. And one piece of advice: to never stare at the screen. You never stare at the screen all day, bro. Like, you gotta get off the screen. You need to stare at this chart, but don't stare at the chart like forever. Otherwise, you're gonna develop an analysis paralysis, which is that means that you're gonna keep thinking too much, and this is a psychological world. This is not even about the money. This is about your psyche and your technicality. So you see where I'm getting to? You have to make sure that you is 98% psychological and 2% technical. Then the money comes with that. So back to the topic: how to place a stop loss. I'm just gonna choose a random pair. AU. Let's see. Let's go as. I'm going back to the AU. All right, let's just say Euro USD. Yeah, I haven't really focused on this one. The good thing about TradingView is you can play around with any platform, but with TradingView, I believe it's more professional. Um, so, okay, let's just say this trend right here before the weekend ends was having a pretty big drop, you know. So okay, so this is how you do it. Every time before you start a trade, you got to see the whole picture. You can't just jump in a trade. Your psych has to be right, and you got to see the whole picture. Zoning in and zoning out are two very important skills. So it's basically zoning in to see the trend. You can make it even very little just to see how things are flowing through. It's been in an uptrend for a while, like you see from here to here. because of the whole Brexit deal and all that, but it's been definitely going through an uphill overall. That means if you are going and you are the guy placing a lot of sales, you're not gonna make any profit. So that's why you zone out to see the bigger picture. Then you can determine if you're a swing trader, you can place more buys. So you can okay. So this middle line here is naturally generated by the trading view, which is perfect because it helps you to see that there's the 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 buys have exhausted itself, and now it is retracing. This is where retracement starts taking place. That's when it goes like that. That it's not really doing much, so you make money, but there's a lot of manipulations going on, which can interrupt your flow. But if you know what you're doing, you can make it work for you. But every time you see this, you see like one, two, three, and it goes up and it touches this line right here. It's gonna tell you that it's gonna be a big drop, or it's gonna be like a big a big buy. But as we can see, the buy has exhausted it has exhausted itself. So what does that mean? It only makes sense, right? If it's too much buy, it's exhausted itself. So if you got in here, you would have had the profit of okay. Let's zone in. Let's zone in right here. Okay, this right here. You see, this is how you know there's more buys. There's a lot of blue. You see more blues. Blues means buy. There's not a lot of black. The black means sell. That means the what they call it, the bulls, the bears. But hey, it's buy and sell to me. So there's a lot of people buying. So the buyers are winning at the end of the day. You never want to go against the flow. You never go full retard. Never do that crap. Alright, so it has exhausted itself all the way up to here. Some people use the RSI, but I don't trust that RSI because sometimes it can break all the way up and you can mess up. So just stay back, relax, go with the flow. Take your nose, observe it. If it's exhausted, then the RSI could be. This looks like a 70 RSI, 75. That's why I think people like trading this pair. I'm always focused on my GBP USD. At most, I go to GBP GBP AUD. I used to do AUD USD, but it was very slow to me. As everybody's different. You got to know what works for you. Okay, so now that this is where the stop loss and take profit comes in. So when you realize that, when you get ready to sell because you know that it has exhausted itself, you wanna make sure it's called risk management. You wanna make sure you're making more than you're losing. Nobody has 100% correct rate, so. You see this okay, let me draw this line right here. Let me see this one right here. Okay, so this line right here, it's not too far from this line right here. It's not too far from let me just get this one. That's a normal line. From here to here, you can draw a line all the way here. So this could be your stop loss. You know, it's not all the way. You don't want to take it all the way up because if it retraces and it goes against you and you're not on your phone and you ain't checked yourself all day, you screwed, man. You're all the way backed up here. You always want to move your stop loss into profit. That's where I went wrong, and now I've learned my lesson. Move it all the way. As you keep going into profit, you keep reducing your stop loss lower and lower. So you get locked in just in case something happens and it goes back. At least you didn't lose a lot of money. So the smart thing to do is you never go too high. You go use your own discretion. You go at a reasonable length. Somewhere here, I think, is perfect. Then you have to take profit I would have gone here. So this would have worked in my favor because it actually kept going down. See, so as you can tell from, so you have to draw yourself a middle line. There's always a middle line that helps you know the ratio of like 1 to 3, 2 to 4, whatever. So you know that you're making more than you're losing. So this line right here, we'll bring it right here where the, when it starts to, when it first, it has to touch like the bottom where if it has to touch the bottom where it first like dropped. So you just gotta stay. You just gotta observe how it goes, and you know where to place those lines. So a line right here. Oh yeah, the line should be right here. Um, and this one we bring it a little lower. So what I realize is that sometimes it's gonna be a balanced base, like really losing, really winning. But the whole point is to win. So if you see that it's too balanced, you're gonna bring the stop loss way lower. Then you expand this just a little bit higher, and you always have to be observant of what's going on. That's why you use your alerts. So if I had an alert right here, you see you can add an alert. You can add an alert right here. Let's see. Let's create the alert. We're gonna create an alert for 1.22600. 22600. You see that line right here? You see that? So that alert is gonna wake you up that hey, your prediction was right. It's going down. You always want to make sure you get that alert and you stay in sight. So if it had alerted me, I would have gone to see it, and make sure I observe. I take all the profits here, and you should always have an amount that in your head that you want. And once you get to that amount, take your profit and leave because it can always push back at any time. Don't be selfish. That's one of the rules. Get your money and get out. So you see these three lines. As it kept going down, what you do is you move your stop loss all the way down here, all the way down here. Then as it keeps going, so you know that you can breathe. You don't want to be anxious just in case it retraces. So it's like what you're doing is that your stop loss should be tracing your take profit. It's like it's like a dog following you back home. It's like it's following all the way here. It's securing your profit. You gotta secure the bag. You heard? All right. I'm just gonna keep this simple. So that's me. I just tell you what I've learned. You feel me? This is a big industry. It's a big world. Everybody. The beauty of this is this is like an art. It's like it's like a matrix. It's like the matrix. Everybody sees things differently, but at the end of the day, you have to see things for what you believe in. So that's just the video of the day. I mean, but yeah, this pair was doing really good, man. That's a lot of pips. That's a lot of profits. Let's just zone in a little bit more. Yep, so you see the alert, I would have got an alert saying it's dropping. That'll make me happy, you feel me? Then it's hopefully it goes down to your take profit. Then you get your money and leave. You don't want to stay there. Once you stay there and you watch your money go up and you don't take that goal that you had, that amount that you had, weird things start happening and your money goes down. Just get your money and get the hell out, man. Remember that in this market you're making more money than most doctors make in an hour. So if you make that money that you want, you get out. And this word is important. I just learned this. You gotta reflect. Get your money, get out, and reflect on what you did that made it work. Get your mind right. Check the charts. Do your technicals before you jump to make another move. All right. Have a lovely day. Stay positive. Be surrounded by greatness, and remember, God is king. Feel me? Have a good one.